Worldwide markets this week. Gold, really? 4,500 this year. The US 10-year under pressure. Is there already a recession in the US? Purple Group running at last. Is the selling over? And the ZAR is at 875. This is Worldwide Markets, episode 626 for 17 April. I'm recording this lunchtime, just after lunch on Tuesday. I'm, of course, Simon Brown, powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest forex rates. So the big story, perhaps, was the Goldman Sachs. Goldman Sachs over the weekend said that gold could plausibly, and I must stress the could plausibly part, trade around $4,500 per ounce by the end of this year. Of course it could. It seems completely insane. Gold's currently around 3,200, but certainly there is a story for gold. I've talked about it a ton on this podcast. It's got upside. I thought we would see a bit of a pullback, but uncertainty has absolutely been freaking it out. So I went and thought, well, let's run some numbers. So all-in sustained costs. I'm just looking at JSE listed gold counters. All-in sustained costs for the last financial year reported. Goldfields, 1,629. Harmony, 1,500. AngloGold Ashanti, 1,611. Pan-African Resources, 1,354. So they all did quite nicely. In those last periods, the profit per ounce, and this obviously they've got their average price that they received in the last reporting period was around $2,250 an ounce. That's off where the gold ended the reporting period. Of course, it had been moving higher. But it means that they were making, on average, per ounce for that reporting period, Goldfields was making $600 an ounce, Harmony $750, AngloGold Ashanti $650, Pan-African Resources $900. That's when they got themselves $2,250. So let's say that this year we averaged just a measly 3,250. Forget 4,500, 3,250. 3,250. In other words, we add $1,000 to the price that they averaged last year. And Goldfields goes up almost threefold. Harmony goes up also almost threefold. AngloGold Ashanti, Pan-African, only really doubling because, of course, they were the low-cost producer. And what does that mean? Well, what it means is that gold miners are only starting to warm up in terms of where they are. This is a one-year chart. Gold in rands is up 32%. Goldfields up 30%. They've had some challenges with their Ghanaian mine, with their Chilean mine. In fact, their Ghanaian mine, they've been told to exit the premises by the 18th, which is Friday. We've got PanAf up 106%, Harmony 76%, and AngloGold Ashanti 72%. Those are all your ex-dividend numbers as well. Of course, they're all now chunky dividend payers. But what you can see, aside from Goldfields, there's been a really strong correlation, and that correlation quite simply is that, strong leverage. That leverage quite simply is that, well, gold price goes up and absolutely the miners just make more money. So if we get just if gold now just kind of went sideways for the rest of the year, these miners are going to double or triple their costs. There's their profits. There's T's and C's because, of course, costs. We don't know what's happening at cost basis. Goldfields has some of their own issues. Nonetheless, they are going to double or triple their profits for that particular period. If we just go sideways, if we got gold at 4,250, Goldfields goes from making $600 an ounce to 2,600. That's a fourfold increase. Harmony from 750 to 2,750, almost a fourfold. AngloGold Ashanti from 650 to 2,650, again more than fourfold. And Pan-African 900 to 2,900, threefold, a little over threefold. The leverage effect here is insane. These gold miners potentially could still double from here, and perhaps even more. Notwithstanding, that's me going to 4,500 is already trying to do the math, not quite 50%, 45% move in the actual gold price. The question is, how likely is this really? Are we just being silly here in terms of it? Yes and no. Gold at 4,500 sounds absolutely crazy. Gold at 4,500 this year sounds even crazier. The point being is that gold has been moving, and what has been causing the jitters with gold is, if anything, even more. We've got more uncertainty in markets, worries around recession. I'll come to more of that in a moment. Larry Fink, Jamie Dimon talking about that. We've got central bank gold buying. Normally they would be buying US 10-years. Are they perhaps buying less US 10-year right now? Absolutely, they might well be. There's a US 10-year auction coming up, I think, later this week. We'll see how aggressive it is. So there's certainly a story for gold moving higher. And at that point, then, there's certainly a story for the gold miners doing higher. And I was having a look. I'm writing an article for Thursday morning on ETFs. And I was looking at the Satrix Resi. I spoke about it a little while ago in the ETF blog, justonelap.com/ETFs. We were talking there about how that ETF is now kind of 50% gold because of the move in the gold miners. And it's having a really, really good year. I mean, year to date, it is up, what is that? Almost 50%, 44, 43% up just year to date. It is starting to get into a bit, it's in some resistance zone at this point, strong support around the 50 to 55 level. The short answer is that, weirdly, the sector locally that is doing best is the resources sector, and that is because of gold. There's other interesting things here. So remember 21 and I think 2022, SARS had an extra 150 odd billion, which they gave to Treasury. That money came quite simply because of record profits from the miners when prices were crazy. And that then obviously higher tax base and dividend taxes just poured tons into Treasury. Suddenly VAT increases are the least that you need. In fact, hey, how about a decrease? Not going to happen, but we would love one. And of course, it helps the rand because these commodities are priced in dollars. You receive the dollar and then you turn it back into ZAR in many cases. So this is just, I am skeptical. I stress that Goldman Sachs said could plausibly. So I stress the could plausibly, but certainly this gold move is really good and is going to continue to stay, and it is going to benefit those who hold it. I hold AngloGold Ashanti. I hold some GLDs, both locally and in New York. And long may it last, I suppose. On the rand, let's have a quick look at that. Last week was all doom and gloom and end of world for our currency. And then our currency went and does what it... Our currency does two things very well. Rush, up or down. And in this case, rush down. So got up to 1992, which is about the worst level we've ever seen. We previously hit that back in June of 23, so almost 2 years ago, and then just started tearing lower. 1889 at the moment, so certainly a weakened off some of the lows. Where have we been this week? We've been down at 1875. We're only a day and a half into the week. I'm recording this at lunchtime. The rand is a couple of things. Massive dollar weakness, and let's have a look at dollar weakness. So we're seeing massive dollar weakness. The GNU is maybe going to survive. That certainly seems to be what a lot of people are betting on. That is a DXY chart, and it has broken through 100. It's gone through 100 before. Last time the big move was July 23, and we can expect that to sort of consolidate, but perhaps even weaken further. Normally, when there's crisis, you go and buy a US 10-year. But what happens if you don't trust the US government? I mean, there must be talk out there, and this sounds crazy. What if the US government defaults on the debt? Or maybe they just roll it over. Or maybe they say that 10 years is now going to be 100 years. I mean, I don't know. But to be clear, we live in absolutely crazy, crazy times. So the dollar is weak. The GNU seems to be surviving. There is talk that won't happen. All of that is good, and seeing our rand stronger. That trend probably going to continue. I think we can expect to see that happening for a little bit longer. We've got a Standard Bank Power Hour on the 15th of May. Trading is a side hustle. Know your derivatives. Last year, Mishima Gama did one, an introduction to charting. I did introduction to trading as a side hustle. And now we are looking at the derivatives. Contracts for different CFDs, futures on index, commodities and currency, warrants and options. 15 May, 5:30, either in person in Rosebank at the Standard Bank head office in Johannesburg or webcast, justonelap.com/events for more information and booking. So I alluded to recession there for a moment. We started getting US bank results out last week. BlackRock CEO, they are the largest asset manager in the world. I think it's $10 trillion. Larry Fink said, I think we're very close, if not in a recession. Now, JPMorgan CEO Jamie Dimon, recession, likely outcome. And I've spoken about this a bunch. I just saw I think it was a Bloomberg article come across my Twitter stream. Trump has changed the tariffs 9 different times since Freedom Day, Liberation Day. Liberation Day was only 13 days ago. So, I mean, it is an absolute seesaw. And that creates uncertainty. He pulled back on cell phones and the like over the weekend and then said, no, but this is just temporary. We're going to move semiconductor chips into a different bucket. We've got the 90-day stay. So everyone's just on 10%, except for China, who's on 145%. You note that China is not doing any knee-jerk, although I did also see something come through across the wires that they are saying, yeah, we're not going to buy Boeing airplanes anymore. They make their own one internally, and then, of course, they can go and buy Airbus. So we got uncertainty. Uncertainty means people don't spend, companies don't hire, companies don't expand, you work down your inventories, and all of that is then potentially we're going to see in a recession. And it might not be a recession. Technically, that's 2 negative quarters of GDP. In the US, there's a particular economic body who needs to pronounce on whether it is or isn't a recession. But the short answer is growth is vanishing. We've been looking at the Atlanta Fed GDP Now graph on this show for the last couple of weeks. Maybe it's only going to be 0. Maybe it'll be minus 0.3 or plus 0.3. Maybe it'll be minus 2.5. We don't know what the number will be, but it is certainly lower. It is uncertainty. Typically, as I said, what you then see is money will then flow into the US 10-year, US treasuries. That certainly isn't happening. Money is most definitely going into gold at this point in time. And the world is worried, rightly so. We just don't know what Trump's next move is. Truthfully, neither does he. We have no idea what tariffs. I do think South Africa, expect tariffs. I mean, we're going to get them. He doesn't like us. He's been moaning about the G20. I said early in the year that he's not going to come to the G20, although he does like to sort of parade in big events. I think there's no chance that he's coming to the G20. The presidents meet, the leaders meet November in Sandton. Not going to happen. Anyway, so what we're sitting with is a very, very likely recession, or if not recession, most certainly a low growth environment. And that is just quite bad. The weird stuff is normally you would then see lower rates, but now there's talk, the FT Weekender, screaming headline this Saturday, US inflation could hit 4%. We might not even see low rates, which usually is how you try and stimulate out of it. Is the Fed brave enough with inflation heading higher, 3.5%, 4%, to cut rates because of a recession? I just can't see that happening. Of course, you now have a low growth, high rate environment. Hello, stagflation. I mean, it's just an absolute horror show. There is a thought I had, and I mentioned it on the podcast I do with Jimmy Moyaha. So someone was patently selling 10-year bonds last week. It was a Wednesday morning. Aggressively so, they were selling it. And we don't know who it was. But how about this? If China really, really wanted to throw a spanner, they've got a little under $1 billion of the trillion dollars of the US debt. Sell that into the market. Therefore, take the US 10-year from 4 to 4.5 to 5 to 5.5, cause absolute pandemonium in their debt repayments, and then go across to Europe and Japan and other Asian economies and start buying their debt and really drop their rates as they start to buy that debt. It's just a crazy idea, but this is the world we live in these days. Crazy is about the new normal, I very much suspect. So the other question that everyone's asking, is the selling over? And the answer to that is nobody knows. And the honest answer is absolutely nobody knows. We can have a look at some charts. They will tell us a little bit here and there. But they're not going to tell us a heck of a lot because we just don't know what happens next. And that is what is worrying markets more than anything else. The S&P, it probably, I would have said that support was around the 4,500 level. We're at that 45, or we hit it last week. We've bounced strongly off it. NASDAQ probably going to see similar to that. NASDAQ, yeah, again, sort of back to a bit of a support level, again, bouncing off those levels. But I don't think we're out of the woods, and I certainly would be cautious around going and rushing out and saying to myself, I know, let's get tons of US equities. I mean, Apple, for example, yes, they've got the concession for now, but I read a report over the weekend that to move 10% of Chinese production to the US is going to cost about $40 to $50 billion and take 3 or 4 years. 145% tariffs, and again, stress, I know they are currently a carve-out for Apple, but that level of tariff absolutely kills it. I was listening to something that Professor Galloway was talking around on one of his podcasts. Outdoor furniture shipment landing in the US expected this week, $60 million worth. Of course, it's summer coming up in the US, and they've got an $85 million payment they've got to make for tariffs. And I mean, you can't operate like that. You absolutely can't operate like that. So it's going to get messy, and it's probably just going to get messier. And I'm not convinced that we have seen the end of the selling in the market. However, we do have a smidgen. So we had purple results last week. They were very strong. I don't think there's a massive surprise in that. Partly why I hold them. HEPS was up somewhat, 204%. A lot of that is their Thrive initiative, charging inactive accounts 25 Rand a month. Not a lot, but when you've got 1 million accounts, 25 million across those that are inactive, that number adds up. And finally, we've seen a bit of a break. There was a seller at 105. Interestingly, there was also a buyer at a Rand. There was a tussle between them. Before that, there had been a seller up at 114. That seller at 105 stepped down to 104, 103 at some point. Maybe it was multiple sellers. The 1 Rand buyer seems to have got their lot, but the stock is now running, and it does seem that the sellers have stepped back. It got to 118 cents earlier this morning on Tuesday. That after it got down to 92 cents just Monday of last week. So a lot of volatility happening here. But a lot of folks, when purple results came out and the stock didn't move, they were like, why? And I'm like, well, there are a lot of reasons. It's a small stock. There are folks out there who paid over 3 Rand for this share. There's no institutions. The results as published were largely a known entity. No real surprise there. But then at some points they do start to move, and that is what we're seeing today. The stock's up 4.5%, 5 cents at 116 cents this week. But after closing Friday at 106, it's up 10 cents. That's 10 cents, call that 8% and change. I like it. And I like it because all of this volatility, every stockbroker I see these days, I say, how's business? And they're like, yo, man, we are busy. So the period that they were in previously, which ended in February, was a good number for them. They did more in HEPS than they've done in 6 months than they've done ever in a year. And now we're in a situation where it's going to get even stronger as we see more volatility coming through. And folks I chatted with Charles Savage last week. They're having record deposit days. I think Monday last week was 90 million was put into accounts for purple shareholders in one single day. Anyway, let's leave it there for now. Bunches of public holidays coming up, but we will be around for all of them. Don't worry about that. My name is Simon. As always, if you're loving the show, please leave us a review. That always helps us. And let's quickly get our sponsors in. Worldwide Markets, powered by Standard Bank Global Markets and Shift, the Global Money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. That's it. Thanks to Standard Bank. Thanks to Shift. As I said, we'll be back again. The public holidays, we will be recording around them. Until next week, my name is Simon. Look after yourself. If you can, look after somebody else as well. Cheers all.